Hey everyone, my name is Peter. I'm a passionate wealth builder. I use stock options and properties as my investment vehicle, and what you're watching is my daily trade log. Every single day I record one of my option trades. So today's trade was on Nike. Nike had an earning only a few hours ago actually, after the close on the 20th of December. So we already know the results. And what I did is I sold the January $90 put option. So as we can see, the trading price at the time of market close was around the 124, 127. And if we look at the chart, the daily chart, we can see that the price was around one. In fact, it closed at 103.21, and so what I sold was the $90, and I've got 124 for it. So not exactly the best fill, but I did get a fairly good credit. Now, what I was hoping with this trade is that the price is going to go up higher, because when you sell a put option, then what you're hoping for is the price to stay above your strike price. So this was my strike price level, the $90, and I was hoping that the price is going to stay above that range. No, when it comes to earnings trades, they are quite risky. They're called binary events. The price either moves up or moves down. No, it rarely stays at the same level. And you can make a lot of money doing earnings trades, or you can also lose a lot of money. So if we look at the hourly chart, then it will actually show us what happened at the earnings. So as we can see, the results were quite good. So the price went up all the way to 115, in fact, above 115. So this trade, I can guarantee that this trade worked out, because there is no way that the price is going to go back down to $90 after shooting up from 103 to 115. So this is already a great winner. Now, I also wanted to show you, because I was away and I was also quite sick for a few days. I failed to create videos over the last few days, but I did manage to close quite a few positions last week. And in fact, I closed probably about 10 positions. And here are the annualized profits. You can see that they're quite nice. I did have a couple of losing trades. GSK, which is a pharmaceutical company, yeah, I lost very, very minimal money on that one. And with KMX, that was actually quite an interesting one. So let's take a quick look at KMX. It was, I'm just trying to find, here we go, KMX. So I placed a trade on the 30th of November when the price was at 69.38. So if we bring up KMX in here, KMX, then it will give us a much better understanding of what happened in here. So I sold the put option on the 30th of November. So right in here, even though I tend to sell put options when the price goes down, I ignored my own rule and I sold the put option when the price went up. That is because I couldn't find another trade on that particular day that I liked, so I thought I'd go with a fairly safe option. I used to trade on KMX. I used to sell put options around $90 and $100. So for me to see the 60, the price to be under 65, I thought that this was a fairly safe trade. So I sold the 62.5 put option, significantly below the price level at that time. But then what happened is the price, I was still fine a day before expiration, But then on the day of expiration, which was the 16th of December, the price went well below my strike price. So this trade ended up costing me a bit of money. So I collected 50 cents credit, and I did have to close it for a 52-cent credit loss. So not a big loss, but it is a loss. And that's part of the game. You know, when somebody is in the trading game, you have to accept the fact that you won't win every single trade. Now, a couple of other trades I wanted to bring to your attention. One of them was EWZ. So I placed this trade on the 14th, and I sold the $26 put option. Now, if we look at the chart, basically when I sold the put option, it was after the price went from $30 all the way down to below 26 or around the $26 mark. So I thought that this was an absolute no-brainer. 2 days to expiration. I was very confident in this trade. So in fact, I had multiple EWZ trades. I placed the trade on the 14th, which was at this point, and the close price was $26.47. I sold the $26 put option, so a little bit below it, just where this line is. And what I was hoping is that within 2 days, so at that point, it will be above my $26 strike price. Now, that actually worked out, and it worked out really beautifully. So I collected on 46-cent premium, which is not a lot of money. But when you consider how much capital I needed to use, it was only $556 capital. And in 2 days, it allowed me to retain all the premium that I collected. The annualized profit for this trade was over 1,500%. So that is a huge return. And of course, when you're trading, and depending on your account size, imagine that you have a much bigger account size and you sell 20 of these. So you multiply the $46 by 20, and that's how much you generate in 2 days. So that's the beauty of trading and options trading, is that it's very much scalable. So I did a similar trade on XBI. I sold the $80 put option after the price went down, and this trade, I placed this trade on the 9th of December, so about a week away from expiration. So let's take a look at 9th of December, which was over here. The price went down a fair bit. It went below $80, but because I've been trading XBI for an extended period of time, I was very, very comfortable with the $80 mark. So I was thinking that, okay, if I am lucky, then it may expire above the $80 mark and I keep all the premium. If I'm not that lucky, then I just roll it to January, not the end of the world. So that's the trade that I did. And if we look at what happened at expiration on the 16th, the price closed at 80.96. So it did close above my $80 mark. And that was also a very profitable trade. I collected initially $2.18 credit, and the total capital I used was about $1,500. And because I was able to retain all the premium collected, the annualized profit, it turned out to be 726%. So once again, it was a short-term trade, and it worked out just beautifully. In fact, I like to trade XBI so much that I traded it since then. I opened another put option at $77. So my trade for today was Nike. Once again, we already know that is going to be a nicely profitable trade. So tomorrow the market will tell me at what price level I can close this, but I'm expecting it to be about maybe 60 cents, 70 cents maximum. So it will be a nice little profit in 24 hours. So that is my wrap up for this daily trade video, and I hope you learned something from it. And if you want to get in touch with me, then feel free to do so via tycoonitos.com, my website, and also you can trade with me if you like for $5 a week. And please subscribe to my channel so that others can also benefit from these daily trades. Thank you for watching. Have a good one.